Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, February 23rd, 2018, and this is the Daily Report for Gold and Silver, our weekend review. Even with a shortened week this week, we did have plenty of action in the financial markets. Gold on the week closed down about $20 today, closing down about $2.20, currently fixed at $13.30 and 50 cents. Silver also trading under pressure this week, down 9 cents today at $16.48, and that is all in light of a fractionally higher U.S. dollar, up about 0.1%, 13 points at 89.79. The big mover today was U.S. equities, with the Dow showing a substantial triple-digit gain, up 347 and closing above 25,000 for the first time in quite some time, since falling below that. Bitcoin stabilizing just below 10,099.20 and 99.60 as we look at the CBOE and CME futures exchange above 10,000 in the cash market. When we take a look at recent activity in gold, we can certainly see that today gold pricing closed moderately lower, down about $1.80 at $13.31. That's a net decline of approximately 0.1%. However, we can see a pretty moderate to strong decline on the week, as witnessed in our weekly candlestick chart. Gold pricing gave up roughly $20. Traders, we are currently flat with no active trades. If you recall, early this week, we did pull profits on our former long position that we entered at $13.23. The market, of course, climbed to these highs of approximately $13.60. And because we had a holiday weekend last week, President's Day, the market really didn't start to get active until the holiday concluded and we opened up for overseas trading. I sent out a special trade alert in which I recommended that we trail our stop to 1341.50, and that stop was hit in trading on Tuesday when the market began to come down. Therefore, we got in at 1323. We got out at 1341.5 for a profit of $18 or $1,800 per COMEX contract. And traders, as far as my current forecast goes, I remain bullish long-term and remain neutral to bearish short-term. First, in terms of the long-term indicators, we have not, on this most recent decline, seen any major chart damage. We are currently trading well above the 50 as well as the 200-day moving average. Secondly, when we draw a very loose trend line to create our support levels from these recent lows, we can see that the market has not broken or traded substantially below that particular price point. It is for that reason that I remain cautious but bullish long term. However, short term is a different story, and I believe we could certainly see some more downside activity next week. And our target remains approximately 1317, which amounts to the 38% retracement, as well as our current 50-day moving average. They are intersecting at this price point, and it is for that reason that I believe that that should be a substantial technical level that we would find support if in fact we're correct and the market continues to track lower next week. And traders, as far as silver goes, as you know, I have been more bearish on silver recently than I have on gold. There have been a couple of reasons for that I believe are still evident in the market. First of all, when we take a look at our moving averages, our 200-day as well as our 50-day and current pricing for silver, we can see that price remains under pressure below both moving averages. At the same time, I see some real potential for some heated up activity in silver based upon a real compression in range. If we take a look at the recent lows in silver as well as the recent highs, absolutely a case can be made for a compression triangle, a pennant formation forming and the fact that we are getting very, very close to the apex. Typically, as a market reaches an apex in a compression triangle, there is a substantial release of energy in which the market will spike dramatically higher or lower. Typically, the market will move in the prevalent direction, which is down. However, it does not guarantee that we will not see an upside breakout in silver. What we are seeing is the real potential for this market to substantially break out of its current range. Of course, recent weakness in the precious metals markets contains a large portion of dollar strength. Over the last month or so, we have spoken about the critical level that the dollar had traded to as it continued to sell off, actually trading to the 61.8% retracement at 88.58. This is not the first occurrence in which the dollar traded to this price point before finding subsequent support and bouncing off of it to higher pricing. We saw that at the mid and end of January. We also saw this mid-February once again. Now, we have current resistance in the market just at about 90.40, 90.35. That is based upon these most recent tops here, with major resistance at 91.50, which is the 50% retracement. And traders, that particular price point and the importance of holding these most recent lows at approximately 88.50 are clearly evident when we look at a weekly chart. We can see that the data set used for this fib retracement is extremely long, from about 79 up to 104. It has a time span of roughly 4 years, and we have seen 5 weeks in which the dollar index has flirted with this particular price point, but has been able to hold, at least on a tentative basis, a good level of support, and thereby we could have seen some sort of a short-term bottom in the market. Of course, dollar strength or weakness will be critical in determining where gold and silver pricing goes from here. And traders, lastly, I do want to take a look at Bitcoin, this being the single Bitcoin futures contract off the CBOE, which closed at 99.20, a net decline of about $100 on the day. What is significant to me when we look at Bitcoin, of course, is that after the fall from grace in which Bitcoin traded to its lowest value since the futures contract started trading, had a resilient upside move in the market, taking it to these highs just above 11,000, which also corresponds to a 38% retracement of the entire trading range from these highs up at 20,000 to these lows at 6,000. Over the last 6 trading days, we have seen substantial downside pressure as this market was unable to maintain these highs above 11,000 and began to track lower, finding tentative support at the 23% retracement level, which comes in roughly at 9,300. Therefore, my forecast currently for the short-term moves is cautiously bullish. In other words, if Bitcoin futures can hold the line at approximately 9,300, the 23% retracement, I think there is a real opportunity for it to go and once again challenge the 38% retracement level at about 11,500. However, if we do see Bitcoin futures break below 9,300, then we could see pricing decline to as low as 8,800 or 8,100 per Bitcoin. Now, that is based on a very, very short-term fib retracement beginning at these lows at 6,000 up until the conclusion of this most recent short-term rally at 11,080 and our subsequent fib levels. Traders, we have talked about potential weakness in the precious metals really throughout the entire week. Of course, we pulled profits at the beginning of the week. We are getting closer and closer to our current target, which resides at roughly 1317 to 1320. That is where we are looking to re-enter the market. We're just about $10 away from that. We'll have to see how the market reacts to financial data next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review.